Well, a survey was carried out late last year, and that's showing that the Kenyan market boasts an economy that looks at a third of the population that remains outside of any form of financial services. Joining me now live from our studios in Nairobi, Kenya, is Suprio Sengupta, General Manager at I&M Bank, to put their progress under the spotlight and take a look at how they're actually tapping into this uncatered market. Thanks so much, Suprio, for your time this afternoon. Before we look into the future, unapproved provisional numbers have revealed that I&M's pre-tax profit grew at a modest rate for the full year of 2009. How did you weather the past financial year?
Yes, it's been a period of consolidation for us, as it has been for most of the Kenyan banking industry. Last year, because of the economic conditions that were prevalent, not only in Kenya, but outside Kenya as well, we were very conservative in our lending, and we cleaned up our balance sheet in terms of our loan quality. And hence, while we improved the quality of our lending portfolio, we did not grow it aggressively, which resulted in profitability being around the same levels as last year.
Taking a look at your lending policies right now, just how much tighter have you gotten in terms of risk mitigation so that you don't go through non-performing loans actually hampering any growth moving forward?
We are still aggressively looking at good quality lenders, and our lending norms have not really become more drastic or draconian, but it's just that the good borrowers were not borrowing last year. We now have built up a good pipeline of lending, and we expect this year to be much better.
With that, you're boasting a pretty aggressive expansion strategy for the year. You're opening up 4 new branches in Kenya already. You've extended into Tanzania as well. What is some of the strategy you're adopting in tackling this year and bringing in new revenue?
Yes, expansion has to go on for a bank our size, which has been growing quite fast in the last 10 years. As you mentioned, we have a strategy of growing our business not only in Kenya, but overseas as well. 2 years back, we made our first international acquisition with a bank called Bank One in Mauritius. And we've just announced the acquisition of another bank in Tanzania. We will continue to selectively grow our network in Kenya, because we feel it's important for our business and for our customers' business to be in strategic locations both inside Kenya and in the region.
This expansion drive with a healthy enough cash position right now, or would you be looking to come to the market to actually finance some of these projects down the line?
We've been very fortunate to have good support from our existing shareholders. Very recently, our 2 major shareholders, Proparco and DEG, the French and German development financial institutions, increased their equity stake in the bank from 11% to 21%. With an additional equity injection, which helped us with our acquisitions overseas. And we continue to draw support from our existing shareholders for our expansion.
Well, looking at your foray into regional markets, you mentioned that it's acquisitive. Are you looking at an acquisitive growth strategy moving forward as opposed to an organic one in those territories?
Going into new countries would be through an acquisition strategy for a bank like us. But once we are in the country with our investment, then we would look to aggressively and but carefully have organic growth within that country of that particular bank that we would acquire.